So last week I made a video saying that my Freetrade portfolio was finally above £60,000.
So for the first time, my Freetrade account has a total value of over £60,000.
But I've spoken too soon. The past week has been a whirlwind in terms of investing, with steep dips seen in a matter of seconds. So in this video I'm going to give you another update to my Freetrade portfolio. I would really appreciate a thumbs up and subscribe because it really helps out the channel. And in return I'm going to get straight into the portfolio. So we can start off with my general investment account. And as you can see, within this week I have lost over £1,000, with my previous value being around £18,000. So let's see what has contributed to the losses. So Intel down 50%, TSN down 37%, World Dividend down 0.6%, Gap down 18%. Rolls-Royce is up by 3%, and their share prices have been going crazy. So it's gone all the way up to 71p, all the way down to 69p, and they're just going up and down, up and down, and up and down. Shinhan Real Estate is down by 81%. So Aston Martin is not doing well again, but Aston Martin recently have given a special dividend. So as you can see from my recent activity, I have received £46.47 in a special dividend. So that's £1.13 per share, which is actually more than the stock price, which is funny. I'm not entirely sure why this special dividend was given out, but I'm happy with that. It makes my loss in Aston Martin feel slightly less painful. So what I did was actually withdraw this amount and put it into my Trading 212 account. Avaya Holdings down by 94%, Saturno Alcatoire down 16%, which is a big amount. ESG Global's down by 10%, Cognite Software down by 88%. And on the other note, I can see that Freetrade have updated the app, so you can see both in dollars and pounds, which is pretty cool. But Cognite Software down by £788, Clover Health down by £87, so that's another £779 loss. CrowdStrike down by 18%, which is a big amount. Fastly down by 85%, that's minus £761. AGM Holdings down by minus 82%, which is another £735 loss. So FTSE 250 has been doing bad as well, so that's down by 3%. We can see a massive dip which occurred in Wednesday, and this is because the CPI numbers were released, and the CPI, which is the consumer price index figure, was 0.1 above what they were expecting, and that led to a huge decrease in the stock market. So the reason why the stock market goes down when CPI numbers are higher is because inflation is not under control, and in order to combat inflation, what needs to happen is that the central banks, such as the Bank of England, or in America the Federal Reserve, they need to increase interest rates. And when interest rates increase, what happens is the cost of borrowing becomes more expensive. The cost of borrowing leads the stock market to go down a lot, because a lot of investors are actually borrowing money and then putting it into the stock market, because the cost of borrowing is so much lower than inflation, and making money like that. And there's also some other indirect reasons why the stock market goes down, because it's anticipating increases of interest rates, which means people's mortgages are going to be higher, which means that the demand of homes is going to lower, and that in effect will affect the future valuations of all these things as people have less money to spend. So the S&P 500 is also down by 3.67% since I bought it. And you can see by the graph of the past month that it's just literally a roller coaster of emotions and investments, up, down, up, down, up, down. So Alibaba is down by a huge 60%. I didn't even realize it went down that much. Metrobank is down by 46%. Corsair down by a massive 57%. Alba Mineral down by 50%. One Life down by 36%. Beidou down by 33%. Shoals down by minus 32%. S&P 500 iShares, which is the hedged one, is down by 21%. The DAX is also down, and as you can see from the past 7 days, there's been huge fluctuations. It went all the way down to 1710 and then back up to 1740, and as I'll show you in my ISA, I am trying to benefit off this volatility. FTSE Japan again is down by a lot more than it says here, because I bought 355 shares for around £25 something. So like I said before, don't always take this number into consideration. I recommend making yourself a spreadsheet or something like I have, just to track your numbers if you are trading quite a bit. So that's my general investment account. Huge amounts of loss, and it was actually way worse than that. The stock markets have slightly recovered in the end of last week because of a lot of news, and as you know, the ex-chancellor Kwasi Kwarteng has been booted out by Liz Truss, and a new chancellor is in the midst, and there's a lot of things going on behind the scenes in the UK politics and the Bank of England, so everything is really crazy, and right now is a very worrying time to start investing. But honestly, it's probably going to be one of the better times to start investing because of how cheap everything is. So the stocks and shares ISA, as you can see, is crazy. And as you can see, this dip here is so steep that it looks like a withdrawal. And I can assure you that I don't withdraw anything from my ISA, because that is not a good idea. You are free to withdraw money from your ISA whenever you want, but the thing is, you can only deposit £20,000 per year, which means that whatever you take out, you're actually taking away from your time. I don't recommend taking out any money from your ISA. General investment account, you can take out whatever you want. But anyway, we see this massive dip here, and that was in response to the CPI numbers, which were published on Wednesday. So the past 7 days has been very, very volatile, to say the least. However, you may notice that I am still in the green in my ISA, and that is because of the strategy that I have adopted in trying to not necessarily beat the market in order to ride out the market right now. Because I do believe following the recession, maybe in the middle of next year, I think that stocks will start a bull run again. However, I could be wrong, whatever, but I want to ride out, the unsteadiness. And I have a few principles in why I think my strategy works. I don't recommend my strategy for anyone. Investing is a very personal thing, and it's all up to your personal risk tolerances, risk to reward ratios, and what you know about, or what you think you know about the stock market. So I have a few principles on how the stock market works. The first principle is that the stock market can never be a flat line. So basic mathematics, y equals mx plus c is a straight line, and the gradient can change. So you can have a upward trend, you can have a downwards trend, and you can have anything in between, but the stock market will never, over a long period of time, ever be a straight line. That's because the stock market is basically supply and demand, and we have so many investors, so many different types of people thinking differently that it can never be a straight line. The second is that stocks go down faster than they go up. That is because of human nature. We respond more to the risk of losing something than the potential chance of winning something, right? So the stock market definitely falls faster than it goes up. And the other principle is smash that like button and subscribe, because it's really good for the YouTube algorithm. But anyway, let's see how my ISA is doing. So Alba Mineral down by 44%, who cares, because it's only around £5. Rolls Royce up by 2%, which is not too bad. Master Energy down by 69%. FTSE All World High Dividend Yield down by 3%, which is a lot. S&P 500 down by 3.5%. Now, my old strategy was to keep buying up the S&P 500 because I think in the long term that's going to do really well. However, due to the current currency situation, I think I'm going to hold off a bit because the pound is really low right now. In the future, when the S&P 500 goes up, it gets converted and you can lose out in so much gains. However, you can, if you want to invest in the S&P 500 hedged one from iShares, for example, and that's down by 6%, which is still a lot. Disney down by 19%, that's a lot. Meta is down by 35%, that's a lot. So what I do in this account is to ride out the volatility, is to kind of trade exchange traded funds. So I'm going to go into my history and show that I have been buying the DAX at different prices. So let's see, I bought the DAX at £17.16 and then I sold the DAX, so here, at £17.31, and that makes a bit of money. I think that was like £200, but there is a lot more money to be made. And my thinking of this period of uncertainty is that there is a lot of volatility, right? Either way, I'm gonna benefit, because if the price goes down so much, these are the ETFs that I would have bought anyway, so I'm winning because I'm laughing. I'm happy that these stocks are very low. They're down about 40% from their highs, and I think in the future it will reach the highs, so for me that's almost a guaranteed 40% return. But if they go up, I win too, because I hold positions in my general investment account of them at a higher price, which I bought before. Either way, I'm covered. I've priced all these different ETFs at different price bands. I'm basically hedging myself. I can't really lose in either way. If the price shoots up, I win because I'm a hybrid investor, whatever that is, I made that up. What that means is that I am a long-term investor in nature, but right now I will trade in exchange traded funds because I've seen the volatility. You wake up in the morning, the prices for German DAX, for example, is £17.01, and you know that it's going to rise through the day, or it can go lower and you buy more and more and more. So as you can see, I have around £10,000 in spare cash, and this is to cover my low end. So if the stocks drop even more, I will buy that. And you can see that this strategy would have paid off if I hadn't invested all my money into the DAX a few days ago when everything just bottomed out. As you can see, there's around a £2,000, more than £2,000 difference. So there was around £2,000 plus to be made in the stock market, assuming you had a portfolio size of around £40,000. So for example, I bought APAC excluding Japan, and this was bought at £19.71. So I'll be waiting to make my profit around maybe £19.80, and then I know that the trend is going downwards, so I think the next time I buy it, I'll try to buy lower than £19.71. Either way, this is not financial advice. for me, this is fun. And I know at the time period that we are now, as you can see, that the stock market is doing crazy bad. I just want to stay afloat, right? I don't really care about making huge amounts right now. I think in the long term, that's where the money is to be made. After the recession, we're going to have a hopefully prolonged period of stocks going up. And that is when you hold for dear life and don't do all this buying and selling stuff. So lastly, we have the FTSE Japan, and this is one of my favorites because it's so volatile. As you can see, I've been buying and selling. So here we can see I bought for 23.30 and then I sold for 23.41. As you can imagine, if I had a lot more money, I could have made a lot more profit. But either way, the FTSE Japan, I'm happy about my purchases at every given price point. For example, 23.95. I feel like that is a good price, and as you can see, the movement of prices, 23.95 is well below the top of the FTSE Japan. And if you know anything about the Japanese economy, it has very low inflation and the stocks are very much flatlined, so we're probably not going to see crazy returns, but I feel like it's a decent place to park your money. So that has been my portfolio update since last week. If you prefer these weekly portfolio updates, which I'm thinking of doing, let me know in the comments down below. If I receive enough comments and enough likes, I will continue this weekly trend. Otherwise, I'll just nip it in the bud because it might be excessive for a lot of you. Make sure to check out some of my other videos and I will see you in the next video.